Alright, so on GJ, look on the daily time frame. You see we are bullish. Got some kind of bullish structure on the daily right now. We are kind of rejecting this daily level here. But if you do find support on one of these two levels, I do see some kind of retracement. Back up to first this wick fill on the daily and then to 700. 4 hour also looks good. Just a pullback to continue up. With London volume, we should push back up. Just have to make sure we do not exceed these levels from yesterday. If we start to close below these levels, then we may see possible downside. We might see something like this occur to test first 500 level, and then further on to somewhere down here. If we do start closing below yesterday's consolidation, but what I'm looking for ultimately is some support to continue up to these targets 400, 700 for today.
to run social media ads? Go to Fiverr.com, select your service, choose an expert, and get your social media ads running today. Freelance services on demand. Start now.
Positive change is what we do. Being impactful is what we do. Every day I come in, we have changed somebody's life. PF has created companies that have generated jobs.
It's actually extremely fulfilling to see the impact that we're having on the planet.
It will bring people, it will bring foreign investments, and it will create jobs. What more can you ask for?
Well, China has, I've spoken with Xi about Taiwan. We agree, we will abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think we should be doing anything other than abiding by the agreement.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning. Welcome to Bloomberg Markets Europe. I'm Anna Edwards, live in London. Mark Cutmore, our Markets Live managing editor, joins us from Singapore to take us through all of the market action this hour. The cash trade is just less than an hour away, so here are your top headlines. Powell picked again. President Biden sticks with the Fed chair and elevates Lael Brainard to vice chair. Treasury yields and the dollar jump. Markets price in a full quarter-point rate hike into the June Fed meeting. And vaccinated, cured, or dead. Germany's health minister issues a stark warning for winter as Angela Merkel calls the latest COVID surge the worst ever. Welcome to Bloomberg Markets Europe. It has just gone 7 o'clock here in London, just gone 8 o'clock in Paris or Berlin. Mark is with us, of course, from Singapore. Can tell us what the markets are saying to him overnight. Good morning to you, Mark.
Good morning, Anna. Well, it's definitely a risk-averse session. Not dramatically so, but yet it is clearly so. The dollar is stronger, yields are higher. We're seeing equities a little bit weaker. We're seeing commodities a little bit softer. And it looks like investors are starting the day slightly nervous, especially given how the US session closed yesterday.
Absolutely, yes, and we'll certainly talk more about the US session, the way that markets have reacted to the renomination of Powell. That certainly will be a topic of conversation for us. We'll get to that in just a moment. Just under an hour away from the start of cash equities trading in Europe, so let's have a look at these futures. And in yesterday's session, we saw that European equity markets sort of put on pause their previous rally, COVID producing some of that. The FTSE was an outperformer in London, though. A bit of a different story on the COVID front, but it was a broad rally here. Miners, banks, telcos doing okay. So that's the context through which we look at this European equity session ahead of us, where futures do seem to be deteriorating and actually just deteriorating a little bit since the last half hour. So that's the European side of things. Let's have a look at the US session now. And there again, we see US futures moving to the downside. E-minis down a tenth, NASDAQ futures down around 0.25%. It was the NASDAQ that was under pressure yesterday. Higher yields, of course, hurting the arguments for owning technology shares, it would seem. And that was certainly a feature of what was going on in markets. Mark, take us through the GMM. You say that it's a negative session, and we do see the MSCI Asia Pacific down by 0.4%. There's a little bit of red I can see on the far screen there for you on the equities column, but we do have some negativity coming through then on the global equity picture.
Yeah, absolutely. The GMM is really interesting today. So first of all, I'm going to draw attention to this column, the sovereign bonds column, red down the line. That is the fact we're getting higher yields. And that's the reason that we're seeing this kind of risk aversion. It is primarily this higher yields. We didn't have cash treasuries open in Japan, in Asia, because Japan is closed today. So they've only just opened up. We can see the 30 years already up 2 basis points, the cash treasuries as they catch up with the futures move. Now, because of those move higher in yields, we're actually seeing the dollar strengthen and weaken in other currencies. Of course, the lira really stands out there after some recent comments from Erdogan. Again, talking about policy rates. It's not really a change of tone there, but the lira continues to suffer. But it's weakness across the board. The yen is another one to draw attention to. Dollar yen broke above 115 today, and technically there's just free space above here. It could go a lot further, and I think some of the fundamentals behind yen weakness really remain. The final thing to draw attention to is we are seeing that weakness in the equities column. Not dramatic, as I said. We're seeing a clearly risk-off day, but not dramatic one. And you can see that also...
I've had this song in fucking ages, man. You know, I actually found this playlist because ages ago, Rakil, when you used to still be on...
commodities have been surging higher. Today it's bouncing when they're all suffering, and that is because there's a story both on the demand and the supply side supporting this iron ore bounce from very low levels.
Okay, the unique beast of iron ore, but a risk-off session overall. Mark, we'll come back with further conversation about the markets. Let's get the latest on the nominations at the Fed then. Jerome Powell is keeping his job. Joe Biden nominates the Fed chair for another 4-year term. The US president also elevates Lael Brainard to vice chair, maintaining consistency as the central bank grapples with rising inflation and the lingering economic impact of the pandemic.
Today, the economy is expanding at its fastest pace in many years, carrying the promise of a return to maximum employment.
I'm committed to putting working Americans at the center of my work at the Federal Reserve. This means getting inflation down at a time when people are focused on their jobs and how far their paychecks will go. It means supporting a growing economy that includes everyone.
We know that high inflation takes a toll on families, especially those less able to meet the higher costs of essentials like food, housing, and transportation. We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched.
I look forward to working with him in the
So,
months and years
I've now
ahead
taken
to build
buys.
a durable recovery.
I'm committed to making those decisions with
Test up
objectivity
here.
and with integrity,
Stops
based on the best available evidence in the long-standing
way below
tradition of
this
monetary policy. and
resistance here, just in case we
Let's
do
get
get a deeper
analysis then.
retracement
Presenter
back
Cohen
up.
joins us
If we
now.
do,
Good to
I'll
speak
take
to
buys
you.
from this level.
Interesting, as
If
we've
we
been now
don't,
some hours after
may
the
look to add
announcements, of course,
position
and the markets have
if
reacted
we
in a
get
way
closes
they have,
above here
pricing in
to, you know,
quicker
test
turn,
these
pricing in
levels.
sooner rate hike, it would seem. Do you think that was right or slightly overdone for the markets to focus on the inflation fight and higher and tighter policy, essentially, whereas a lot of the press conference were talking about employment and full employment being another goal?
You're so down.
Well, I think the overwhelming takeaway does seem to be of continuity and stability at the Fed, because the thinking was to change horses midstream could have risked policy error. The White House is sticking with Jerome Powell. That suggests a certain degree of familiarity with monetary policy in the US, and of course it removes the risk of political horse bargaining over an alternative candidate on the floor of Congress. So that's where it's been welcomed. But to your point, though, in truth, nobody quite knows, because the inflation story is going to dictate what the Fed will have to do next. You know, the Fed is standing behind this narrative that this price spike is transitory and the supply chain blockages will iron out, and that of course will take pressure off them. But the markets and other watchers aren't necessarily convinced by them. They think they're behind a curve, and that's why there is a suspicion that there will be pressure on Jerome Powell next year to move faster than he thinks. And let's not forget, there are US elections at the end of next year, so if inflation becomes political, with household goods prices continuing to rise, there will certainly be a lot of pressure on Jerome Powell's act.
And this was the continuity move. It's, you know, supposedly stability. We're keeping Powell as chair of the Fed. Why do you think then the 2-year yields moved so much on the session yesterday? It was a really, really big move in the 2 years, as if the market was kind of taken by surprise by this. What's the explanation?
Well, look, I suppose some of us in part reflect on the fact that Perhaps people were expecting the alternative Lael Brainard to get the nod, for example. The thinking was that there's a lot of division in US politics. President Biden has to give a nod towards the progressive wing of his party, who wants, much more, the Fed to take a more expansive role in economic policy, not least in areas like climate change and tackling inequality. And of course, that would have meant more dovish monetary policy, and hence there was a feeling that perhaps things had gone through. If they had chosen Lael Brainard, it might have been a more dovish Fed. But, at the same time, you can't exactly accuse Jerome Powell of being a hulk. He has stuck to the employment side of his mandate quite firmly. He's obviously been pushing full bore in terms of US monetary stimulus since the crisis began. He's only gradually pulling out of it, and he doesn't yet seem to be especially perturbed by the inflation outbreak. But as I say to you, Mark, there is an element of flying blind in all of this for everyone, because ultimately inflation next year will dictate where the Fed goes.
And thank you very much, Bloomberg's Enter Curran, on the aftermath of the announcements from the White House yesterday that Powell stays at the Fed. Mark, let's have a conversation then about the markets. We'll start on the Fed and then we'll widen it, because there's a lot to talk about this morning. Let's start the clock. And I really want to get your perspective on whether this is the markets pricing in Powell, or this is just the markets pricing out uncertainty.
I think they're pricing out uncertainty. They're pricing out that dovish element of Brainard. I think Enda's kind of got it spot on there. I was a bit surprised by quite how far it moved. I thought that when we got this outcome, we might see a little bit higher yields. But 2-year yields yesterday, 8 basis points. There was that poor auction. They really kind of surged higher. And I think there must have been some more kind of flows or some stops that kind of went off in the market to slightly exaggerate how far it went. The mindset shift just in the last few days about what the Fed needs to do on policy side has been remarkable how quickly it's changed since last Friday. People are now expecting a faster rate of tightening that was not really on the agenda only a week ago.
What's the next message from the Fed then? Is it around the pace of tapering? Do we get back to that conversation once again?
I think it's going to be. I don't think they yet want to confuse the market by saying that they might hike rates while they're still buying bonds, while the QE program is still on. So the next move will have to be a quickening of the tapering program. I kind of think it makes sense to speed up the pace in December, but it would be remarkable to do that so quickly. Maybe they'll kind of pave the way for that possibility and not do it quite yet. But certainly that's what everyone's going to focus on into the next Fed. And the next Fed is now live for that exact reason. And I think it means we've got extra focus on the large amount of growth data that particularly comes through tomorrow, when we do a preliminary PMIs today as well.
Okay, lots to talk about, as I mentioned, so let's leave that for a moment and talk about some of the geopolitical tensions. We thought perhaps yesterday morning that they were not having too much of an impact on markets. I'm thinking of the Russian build-up of troops in Ukraine. Russia says this is no threat to anybody. Markets have a different view, though. We saw some reaction in the end in Russian assets.
Yes, very much so. I think we talked to the show. I was kind of surprised we weren't pricing in much, and it seems like global defense stocks weren't reacting. Though you pointed out, Anna, in that index, you also have airlines which might be suffering from COVID concerns. But it doesn't seem like there's a global concern. Then suddenly yesterday we saw Ukraine CDS surge. Now I should note that would not be the most liquid of tickers or indicators there, so I wouldn't get too carried away with that. But we also saw the Russian stock market fall, the Russian ruble weaken. So clearly, investors are starting to kind of want to reduce their exposure to those countries in that region, meaning they're beginning to price a little bit of an element of truth into over the weekend.
Briefly on oil, we're down below $79 on Brent right now. Ongoing conversations about will they, won't they release from strategic reserves, and if they do, will it have any lasting impact? And what would OPEC do?
I think it'll have no lasting impact. I think it's remarkable that OPEC might respond by not increasing their supply. I wasn't expecting that move, but that increases the idea that even though the SPR release won't kind of help the market, that kind of hammers that home. I do think that oil might have priced the year just because people were getting too carried away on the bullish side. Oil tends to be a market where people overcorrect on sentiment. That said, I don't think an SPR release will drive that much lower.
Excellent. Nice place to leave the conversation. Remember, you can get up-to-date analysis and insight from Mark and the rest of the team. MNIV Go is the function to use on your terminal. Coming up here on this programme, unvaccinated, cured or dead by spring. Germany issues a stark warning to those who remain unvaccinated as the country grapples with surging COVID cases, certainly trying to get the message that the virus will be very difficult to avoid. We'll be in Berlin for the latest. And later in the programme, don't miss our exclusive conversation. In fact, later in programming, after this programme, later this morning, the Dutch Central Bank Governor and ECB Governing Council member Klaas Knot will be joining us. That's at 9 a.m. UK time. This is Bloomberg.
dollar still looks fucking weak, so it's not my mind. Oh no, yeah, Harry. Looking at South is just based on price projections. I'm surprised.
I've spent centuries evolving with the world. That's the nature of being the economy, observing investors choose assets to balance risk and reward, with one element securing portfolios time after time. Gold, agile and liquid, a proven protector. An ever-evolving enabler of bold decisions. An asset more relevant than ever before. Gold, your strategic advantage.
Like short-term scalps. Yeah. But
blue hydrogen into blue ammonia. Discover how we delivered 40 tons of blue ammonia to Japan, catalyzing new pathways to cleaner fuels. Aramco, powered by How.
Do we have any idea at this point what President Putin's intentions are here?
Well, that remains the big mystery, because what we're clearly seeing is a very dramatic build-up of Russian troops in various parts around Ukraine that would facilitate a very rapid, large-scale invasion, potentially as soon as next year. The one thing that we don't know is what Vladimir Putin actually intends to do with those troops. Of course, he's the master of brinkmanship who has built up troops in the area before and likes to provoke and cause trouble, because that's how he gets his influence. His economy is not big enough to be a big player on the stage. And NATO, he's worried about what NATO is doing with Ukraine, whether this is a warning signal to tell NATO and others to back down from the area, or whether he really intends to make good on an invasion potentially, is the big question. Either way, the US is not taking any chances, which is why you can see these warnings escalate, and the pressure is mounting to try and deter him from whatever it is he might actually be intending.
This could be a fresh challenge on multiple fronts for the Biden administration, right, in terms of their willingness to engage in a military sense?
Well, that's right. Of course, the US has recently engaged in quite a messy, chaotic withdrawal from Afghanistan after 20 years of being bogged down in conflict there. And the US president made it very clear at that time that the US is no longer interested in getting heavily engaged in military conflicts far from its own shores. It's just not going to simply do that anymore. So having made that very clear, the Russian president might say, well, are you actually going to follow through or not if I went into Ukraine? So that's a big question for the US. At the same time, he's got very domestic considerations on his mind. His popularity has been falling at home. He's still trying to get a very big economic package through Congress, and that's bogged down at this point in the Senate. So he's focused on that. He really doesn't want the distraction of having to deal with Ukraine as well. So a lot of balls in the air for the US president when it comes to this question.
Conversation about this pan-EU conversation, because there is great variety within the European Union. But what are governments pushing ahead with in terms of restrictions? Where are we seeing that movement? Yes, and we're seeing huge divergence between Central and Eastern Europe, and then, of course, Southern European countries, which have a much higher vaccination rate. But we did see pictures of protests pretty much across some of the German-speaking countries, but also in Belgium and the Netherlands, in protests to some of the restrictions that are kicking in. But nonetheless, governments are pushing ahead with restrictions. Today we have Austria, which is a focus point, and has been for a few days now, going into a national lockdown. We have more information now in terms of the way that this is going to work. We know that this is a lockdown potentially for about 20 days
national vaccine mandate in which everyone will have to get the vaccine. What is interesting to me about this case, of course, is that the Austrian government was faced potentially with a political crisis, the economic ramifications that come with shutting down a country. We know there's many and they're in multiple fronts, but nonetheless has decided to tackle the health crisis as a priority. It says we can deal with the social, potentially political ramifications of this, but we're not going to risk it on the health front. And that could set a precedent for what's to come for countries that are facing the same type of infections. What was the process like to get here? Do we know what happened behind closed doors? Well, behind closed doors, we do know the president had spent at least an hour with each individual, and actually a lot of time went over with Governor Brainard, and it was clear that these were the two top individuals for that spot. He also spoke to a number of senators, including Senator Warren, who's at the White House recently, Senator Sherrod Brown, who's going to be that first line to really start organizing the panel. Potentially, we see a hearing for these individuals as early as December. So that was some of the background. And then, of course, we've been waiting for this decision. Prior administrations have made this decision a little bit earlier. So this is coming a little bit late in the schedule. Potentially, they were working with Congress to make sure that they had the votes given for either of these two. Formally, Sherrod Brown had said that he thinks that either of these candidates would be able to get through the confirmation, but potentially the White House didn't want to go in with a messy fight. And I would just look at their past numbers. It was in the 80s. I think it was 84-13 when Governor Powell was, when he became Chair Powell, when he got through his Senate confirmation. And in 2014, things have really changed since 2014. But Governor Brainard, hers was in the 60s. So potentially she didn't have as much of that bipartisan support. But really, this does seem like the path of least resistance. And I know you're going to be speaking to Ira Jersey, but I like what he says. Staying the course while still mixing things up, because they were able to get a Democrat in that top second spot.
Yeah, we'll come to Ira in just a moment. I want to get Mike's take first of all. Ira, do you think, to Anne-Marie's point, though, that Chair Powell has been undermined by this process? It's taken longer than we thought. It has been a drawn-out process, and a lot of it has been in the public eye. We've all been trying to figure out what is happening here. We've all been waiting, Mike McKee, to kind of see what happens next. Do you think Powell's been undermined?
Well, I wasn't sure if you were talking to me or to Ira, but I do think that Powell is in fine shape at this point, not undermined by it. There's a lot of politics that's got into this, and if anything, people are going to look at the Biden administration and try to figure out why they took so long, not so much Jay Powell. But you take a look at this chart that I brought here along the Powell years at the Fed, and the white era is when he was chair. This is his entire term. And you remember back in 2018, the Fed was raising rates and planning to raise rates more, and the market sort of choked on that, and he was forced to backtrack. And at that point, people thought this newcomer was probably not up to the job. Then we saw the crisis come along, the pandemic come along, and he immediately cut rates to zero and started pumping money into the economy and was seen as much more of a hero. And of course, it's always, what have you done for me lately? So the real question is, what does he do next in terms of inflation? Does he speed up the taper? Does he move inflation ahead of unemployment in terms of what the Fed is considering?
I wouldn't be so pissed if this GJ candle closes above that previous support. It's gonna make.
You're looking for sales on GJ?
Well, I mean, depending on how this 1 hour candle closes, will determine what I'm gonna look for. Because if it closes at support, then we're still in the same range, and we can push back up to the top, and that would be a big rejection wave from the downside. But if it closes below 800, basically the previous support, then another resistance below 800 would give the possibility for further downside.
Yeah, that makes sense. I would be careful trading within these two levels, this and this, because it's a huge liquidity area.
Yeah, that's what Chris marked out yesterday, right? Yeah, so basically look at that on the 1 hour.
Yeah. So.
Yeah, so if the 1 hour candle closes above that zone you have marked out, basically. Above here. Closes back above there with a big wick to the downside, then, well, obviously not like that, but if it, you know, because you retest the highs, if the support is respected. We've already busted down so far. Makes it kind of tricky. How's it looking on GU?
Yeah, still following the blueprint.
What's the blueprint? You post the chart?
You were not here. I was looking to sell from here, basically, this previous support area. But I would need this support to hold. Then the next candle, or even if we have something like this, then once we start breaking this support, then we'll sell back down. Because overall we are going this way, and this was the previous support level, this key level. So if I can get that structure from here, now sell. But for buys, I will need you to create target, come to find support above here or here, then retest the high created.
Yeah.
Because if you look at it on 4 see this previous support area. Now we're currently struggling at that point, so we could easily reject this to the downside.
Yes, sir. You basically got your eye on that previous 4 hour resistance level. Yeah, that looks interesting.
Really interesting. Hopefully the volume at London doesn't just...
How can we deliver one of the fuels of the future? Hydrogen could play a pivotal role in tomorrow's energy mix, but it's very expensive to transport. To ship it cost effectively, transform blue hydrogen into blue ammonia. Discover how we delivered 40 tons of blue ammonia to Japan. catalyzing new pathways to cleaner fuels. Aramco, powered by How.
Now, as COVID cases surge across Europe, some countries are introducing targeted measures against the unvaccinated. Austria has taken the hardest line yet, putting its unvaccinated population under a 10-day nationwide lockdown. Joining us now is Jennifer Rowe. She's head of the Centre for Urological Biology at University College London. Very good to speak to you, Professor Rowe. Thanks very much for joining us. And so we're seeing a lot of these measures being brought in across various parts of Europe, and sort of dividing up between those who are vaccinated and those who aren't. The idea of this policy is it encourages more of the unvaccinated to seek the vaccine. Is it being...
So at this point now, we have actually retested this level here, and now London Open, we could see some possible downside and some good volume coming in. So I would start to prepare to take entry for sells. Same thing with GU, you could take sells from the top of the range.
Yes, exactly.
So as you can see, sales played out very, very nicely on GJ. Obviously we had the loss this morning. Tried to take rejections off 154, didn't work, downside. I did also plan for this exact thing right here. I said if we break below here and we see a retest, you could have taken sales here, but there was just no place for the stop loss. Stop loss would have been 25 pips, had to be up here. So I waited for resistance. Resistance was formed, easy. 8 AM candle opened, even though some people would wait for retracements, test up here for the 1 hour wick. But GJ can push a volume, so I took it as soon as 8 o'clock opened, stops above here. Slightly risky because it's at the open, so we could see some retracement and back down, but with volume, we wouldn't see that. So I took a sell here, and as you can see, 33 pip target easily. Why did I pick that target? Well, on the 4 hour time frame, it just made sense to target somewhere around here. On the 1 hour time frame also, we did have this minor resistance, or what could have been support here, but I wasn't really worried about that. It was more of a long-term play, down to these like mid-range wicks, and on the 4 hour with this volume especially, I was thinking if we do break this, we will see, you know, a bit more of a move down. We probably will retest 200, but I'm out of the trade right now. Let's see what happened on GU. So on GU, I was looking at the same thing here. Didn't take the trade on GU though. Just as you can see, there's just no volume on GU right now. Maybe because of the pound strength, because of pound. I mean, not the pound. USD strength. Maybe that's why we're not struggling to go down a bit. But you can see that trades would have been right here. Resistance, low resistance makes sense. But what was that? Around 10 pips. 10 pip downside with a massive retracement. Okay, it was around 20 pip, sort of 20 pip move. GJ was 30 pips, but yeah, that could have been a nice little play as well, to be honest. But we did stick to GJ and just load up on that. And to be honest, it's probably going to go to 200 now to test, and maybe later on we'll see something like this. We'll come down like this, maybe retrace back up and continue down. But if there's volume, the retrace is going to look something like this, a lot further down like that, or just a straight breakthrough. But overall, a couple losses today on GU as well. We took a loss. We tried to sell this candle right here because I was expecting downside on GU, just the way the 4 hour was all, you know, poised for downside to test this level, but no, volume didn't come. We wanted to do a retest first, that's fine. Sales would have been perfect here to retest down, but I was focused on GJ. But still, that was a big win on GJ, so more than recouped the losses this morning, so overall pretty good day.